It's just breaking. We go live with urgent developments from Baghdad, where the Central Bank of Iraq has just made a major announcement that could very well redefine the Iraqi dinar's standing in global finance. The tone is unrelenting, the implications profound. The eyes of investors and officials alike are on this moment. This is an unprecedented move. This afternoon, the Central Bank of Iraq declared a pivotal shift in its exchange rate policy. For years, the exchange rate has been tightly managed, pegged in a conventional arrangement, effective since February 8, 2023, at around 1,320 dinars per US dollar. That regime has allowed the central bank to maintain control, stabilize prices, and manage reserves. But today's announcement signals something different. It is being described across financial circles as a breakthrough, though the full contours are still unfolding. Economic analysts quickly flag that the peg has long anchored expectations and constrained speculative volatility. Projections from the IMF, published just weeks ago, saw the average exchange rate holding around 1,300 IQD per USD for both 2025 and 2026, mirroring 2024 levels. That forecast suggested little room for dramatic shifts, and indeed, the peg has held firm. Iraq business news, +1. Yet speculation had been simmering. A recent reality check report underscored that despite optimistic claims by some dinar watchers, the fundamentals pointed in the opposite direction. Declining oil revenues, rising fiscal pressures, and vulnerability to global shocks were more likely to weaken the dinar further, perhaps pushing it toward 1,318 IQD per USD by year-end, not strengthen it. Iraq business news. Against that backdrop of tempered expectations, the central bank's move today jolts the market. While full details are still pending, sources indicate a reassessment of the peg may be underway, a shift that could allow some flexibility or recalibration. Initial commentary from Iraq Business News describes the peg as conventional, but stresses that the board of the central bank retains the authority to adjust exchange policy. Iraq Business News. Concurrently, remember that Iraq has been preparing for a future of digital currency governance. Earlier this year, reports surfaced indicating that the central bank is gearing up to introduce a digital dinar, a fully regulated, electronic form of the currency, intended to replace, or at least supplement, banknotes and crack down on parallel market distortions. Intelli News. The digital dinar is projected to mirror the official rate and eliminate the mismatch between market rates and paper currency trading. Today's announcement may well tie into that long-planned digital transition. What makes today's situation so urgent is how fast markets respond. Currency traders and money changers across Baghdad and Erbil are already reacting. In recent days, IraqiNews.com reported some fluctuations. The US dollar had edged slightly up against the dinar on August 10th and 11th, and before that, the dinar had shown modest gains. The picture was uneven but cautious. Iraqi News. Now, with this central bank development, there is an air of anticipation. Could the exchange rate be adjusted to reflect a stronger dinar? Could we be seeing the early stages of a managed revaluation, or at least a narrowing of the fluctuation band? Some speculators and institutional watchers are already calling today's statement a breakthrough, though seasoned analysts remain cautious, warning that much depends on Iraq's oil revenue recovery, fiscal discipline, and political stability. In more technical terms, this could indicate a shift toward partial flexibility. The peg could be maintained, but with mechanisms, perhaps a crawling band or a managed float, that allow the currency to appreciate gradually as economic conditions improve. If such a transition aligns with the digital dinar rollout, digital transparency could reinforce credibility and reduce arbitrage opportunities. The implications are critical. A stronger dinar, even marginally, would offer relief to imported goods inflation, ease pressure on foreign currency reserves, and boost confidence in the banking sector. It would also represent a signal to investors that Iraq is stepping toward modernization of its financial infrastructure. Yet, it must be handled delicately. Sudden devaluations or miscommunications could provoke capital flight or spark panic in black market exchanges. Take, for instance, Wise's mid-market exchange rate data. At present, 1 IQD equals roughly 0.0007634 US dollars, translating to about 1,310 dinars per dollar. That rate has held steady in recent weeks, showing 0% change over 30 to 90 days. Why? That underlying stability has given little ground for dramatic moves until now. Here, in this moment, the central bank's announced shift feels like a turning point. If they usher in a digital dinar and recalibrate the exchange framework simultaneously, it might mark the beginning of a new era. One where the dinar is not just pegged and static, but responsive, authoritative in its digital form, and aligned with Iraq's economic strategy. Politically, too, this step could be savvy. Iraq has been under pressure, from oil price volatility, regional tensions, and internal reform demands. Domestic spending is being trimmed. Public debt has declined, as the central bank reported earlier this month. That suggests the government is tightening belts, possibly building credibility ahead of monetary reform. Iraqi news. If the dinar becomes stronger or more flexible, it may enhance public confidence. Iraqis might choose to keep funds in digital form, reducing hoarding of paper cash and injecting liquidity into the formal banking system. That's exactly what the digital dinar vision aims to achieve. In Tele News. Of course, this remains speculative until policy documents or speech excerpts are released. Right now, what we know is that the Central Bank of Iraq, with IMF-backed authority and constitutional mandate, has signaled a shift. The markets are reacting. Media platforms, including financial YouTubers, are flooding with headlines, everything from IQD Breakthrough 2025 to Wells Fargo shows $3.30 rate. Though many of those need to be treated with skepticism until verified. YouTube, +4. YouTube, +4. YouTube, +4. This coverage could fuel speculation as much as inform. Our role is to track confirmed information, interpret its meaning, and communicate the implications clearly and professionally. From here, we expect further details in the coming hours or days. The central bank may issue a formal bulletin, define the parameters of the new exchange regime, and reveal timelines for the digital dinar's pilot or rollout. Market participants, banks, money changers, forex desks will adjust rates accordingly, and will watch whether the USD/IQD rate moves downward, signaling dinar strength, or simply girds for managed stability. Remote investors will also monitor how resilient Iraq's foreign exchange reserves prove, and whether oil revenues rebound enough to back a stronger currency. If reserves remain sufficient, right now they cover over a year of imports despite slight declines, then a managed appreciation could be sustainable. Iraq business news. This isn't a flash in the pan. If the digital dinar becomes reality, it transforms how Iraq transacts, banks, and integrates with the global financial system. A digital, exchange-controlled dinar, backed by transparent rates and regulations, could be a leap in monetary policy. But clarity matters. Investors and citizens alike need to understand whether this is a revaluation, a technical adjustment, or simply